these tech companies came and changed the whole story in 10 years, 15 years story.
Yeah.
They built much bigger companies. If you look at Kita, for example, right?
How fast have they grown, right?
Yeah, I heard that they measure the milestones in days.
Definitely, AI is here to stay. There's probably going to be a little bit of a boom-bust cycle in AI. I think a lot of capex has gone into AI, especially in the US. They say that if you take out the investment in AI, half of the GDP growth will completely come down in the US. So half of the GDP growth in the US is through AI capex investments.
Where do you see like 2026?
That's a very good one. I would say 2026 is probably going to be same as 2025.
How do you see, like, what is your key advices for founders or business owners who are building today?
Yeah.
How they can build for an exit or a fundraise? What are the little nuances they need to take care?
Yeah.
Thank you, Renjit, for joining this podcast today.
Perfect.
I'm gonna trouble you a lot today.
Oh my God!
Because I'm seeing everywhere you're talking about AI, tech, all these things. So just wanted to pick your brain and understand how do you see the market, the trends in AI, tech related.
Perfect.
But tell a bit about yourself before we are starting.
We'll do that. Thank you for having me, Shafeekh, on this podcast. And we need to have a great name for it. So I'm Renjit Philip. I'm a managing partner for a boutique consulting company called Future You Strategy Group. I like to say that we are doing three things: prepare mid-sized companies for M&A, help startups with funding, and third, last but not the least, is supercharge their workflows with the power of AI. And why does it make sense? Because if they are more productive, they make more money, and if they make more money, it's better for them. They get better terms for an exit from a funding and valuation perspective. So that's how we're kind of seeing it. That's about me. I do a few other things as well. I'm sure we'll get into it as we, including running another podcast. So we'll get into it. That's
lovely. FS Brews, right?
Absolutely.
Yeah. Audience, please do watch out.
Yes.
it's covered 75 episodes of us.
Nearly. Wow. And it's on insurance and insurtech.
So I'm going to put you on hot seat today.
Oh my God. This is a first time on this side.
But Renjit, like if you look at 2025, right? How was it for you? Like,
right.
Because the podcast will be easier if the business was easier for you.
Yeah, absolutely. No, so I think the consulting company is on its early days. So we're very excited about the AI practice that we launched. As you know, with M&A, the deal cycles are longer, and we represent sell side. So, finding the right buyer takes time, and deals sometimes don't happen. So AI practice actually is something that we kicked off, to give us some sort of revenue cushion in between. And I've been writing this newsletter on AI ever since ChatGPT came out, and been learning. And I thought, hey, this is a great way to transfer those learnings to my clients, right? And that's something quite exciting and has picked up very well. We are looking at clients in the insurance space, clients from the travel space, and you'd be surprised the kind of things that we do, getting customer inquiries sorted. They come in through all sources, right? You got customers coming in through email, through websites, through WhatsApp. And if you lose a single customer, that's a sale opportunity. You can use AI to consolidate all this and react to customers quicker. You actually land the deal, right? Simple things like that to payments reconciliation, which is your world, Shafeekh. Making sure your suppliers pay you. Or your customers pay you in time, right? And all this can now be automated with the power of AI. Yeah? So some of these things.
And what are like some key lessons that you have in 2025?
I think clearly, as with many entrepreneurs, I have the issue of, sometimes going after the next shiny object. So like I mentioned, I'm on the advisory council for FinTech Tuesdays. I have a podcast. I am a non-executive director for a DFSA-based insurance broking house. So I think for me, it was a little bit about, focusing, and sometimes managing my energy better and not chasing the shiny object so easily. And I think that's what I'll take to next year. That's one key personal lesson, I would say. Yeah.
And one of the things I observe in 2025, the tech has moved, looks like 10 years.
Yeah.
Right. It's like if you compare to the previous years,
Yeah.
the whole tech has moved super fast in 2025.
Correct.
Do you see that? And you work in insurance very quite actively, right?
Yeah.
One of the boring industries.
Yes.
Like, how do you see that changes happen in 2025 in
Sure.
terms of AI, tech?
Absolutely. No, you're right. I think things seem to be changing at an exponential pace. And like people say, it's, compute capacity has grown dramatically, right? Things like GPU, NVIDIA GPUs are here. Memory has gone to the lowest cost possible in terms of, availability. Compute is still expensive. Talent is available. Cloud is freely available. So all these factors have caused the exponential growth of technologies, right? And you can see these model companies releasing new models, AI models, almost on a, quarterly basis, right? So I think that is absolutely true. Insurance is a little bit of a, and I know people will, probably throw stones at me, a little bit of a boring cousin of all these industries, right? We have been traditionally slow to adopt some of these technologies. And I think that's going to change because in the UAE now, as you know, open finance regulations have been rolled out. And as a result, what's happening is with customer consent, you can exchange your policy data, your claims data to service providers. And these service providers could be insurtech companies. So now if I have bank information, insurance information, using this, I can create tailored products for you, right? And so now that personalization dream that we used to talk about is finally possible. So I think next year is going to be very exciting, even for the boring insurance companies. And I think you can see some innovative use cases coming out, especially in fintech and insurtech for sure. And, I want to touch upon digital assets as well. As you know, stablecoins have kind of, obviously with the Genius Act in US, they have been regulated and now they are allowed. And UAE has never been, far behind. And we have our own version of UAE dirham-backed stablecoins,
yes.
right? So now when you have digital assets, you need insurance to protect those digital assets, right? So another opportunity for our boring insurance cousins. And now when you have on-chain assets, you have tokenization of real-world assets, right? So, if it's real estate, bank deposits, shares even, if you tokenize them, you can actually improve financial inclusion, right? More people can buy it, right? So again, that ownership will lead to need for insurance protection. So I'm quite excited about next year.
And what are the industries that you see? Like there's e-com, professional services, boring traditional manufacturing industries, right? Like where do you see the change happening drastically?
In terms of adoption of technology,
AI, right? And
I think I'm definitely seeing people where they used to traditionally put human beings on the job, coming and asking us if, can you redesign the processes for us, right? So this is a fairly well-known business process redesign that we do. But if you put AI on top of it, it becomes, very, very powerful. Right? So we are even talking to some of the business owners and saying, before you hire another person, just think through, can AI do part of that job? The point is not to, sort of fire people or lose jobs, but can you make them do more value-added activity rather than just, taking stuff from emails, copying some Emirates ID, putting into an, Excel sheet? That's not going to be exciting work for any human being, right? Can they do analysis? Can they do MIS? Can they get more customers for you, right? So that's where I think these kind of industries.
And how do you see the SaaS is changing, right? The SaaS is one of the industries that I see that probably can be disrupted to a large extent, right? And cost of building companies are much, much cheaper, especially tech companies.
Yeah, absolutely. I think maybe in 23 or so, everybody was saying SaaS software is dead, right? And everybody is going to make software using Replit, Lovable, Cursor. Now you'll have a lot of SaaS software. But the reality is, the SaaS guys like Salesforce and all these guys learned that, hey, I need to put AI in the software, right? So, for example, Salesforce has got, I think they call their AI agent Einstein, right? And everybody has now, Notion has AI in it. Everybody has AI in it, right? So that's happened, right? So SaaS, I think, narrowly managed its death by incorporating AI. Some SaaS has not, software has not done it. I think they will definitely feel the pain. And I just want to talk about, building software through AI, which we now call vibe coding. And I'm.
I saw your post,
Yes.
LinkedIn post.
You did.
You're vibe coding a lot.
Yes, and I'm on some of these accelerators, and where I advise founders, I thought I need to try out what I advise. Right? Let me vibe code an application, and let me tell you, Shafeekh, it's not easy. I know some coding. Okay, my coding is 20 years old, the knowledge, but I know some coding. The reality is, vibe coding is not easy, and you need to be very crisp and clear about the instructions you give to AI, and debugging is a pain. So to build a simple application, I really struggled. So then I realized SaaS is not going anywhere because it's not very easy to kill Salesforce, as an example, right? Or HubSpot, right? Or Zoho. They will all adopt AI, and but what's going to happen is, now, me, my co-founder, we will all build software personalized for us for private use very quickly. So I think that's going to happen. Instead of using macros on Excel, I might use a small purpose-built application. I think that's definitely going to happen.
And how about enterprise SaaS? Because I see that's where a lot of friction is coming, because the budgets they used to spend quite heavy on enterprise SaaS products or enterprise ERPs, right? Where I see a lot of new entrants are coming, which can be much cheaper. Odo is a good example of that. Even it's a bit old, but if you look at, there are a lot of AI companies in US coming, tapping that space to be much cheaper.
That is true. See, I think enterprise, I'm not an expert in this space, but I feel enterprise, the trust element is very important, right? I mean, nobody is getting fired for buying from Microsoft, right? Or from IBM, as they used to say earlier, right? But if a new startup comes with something which is mission critical for my business, I might think a little 2 times before I do that, right? So I feel enterprise is safe for now, especially if they adopt AI. What's going to happen is perhaps the pricing is going to change, right? Earlier it is like, Renjit has a login, so he has to pay monthly per person, right? Employee-based pricing. Maybe the pricing model will go to work-based pricing. So, for example, let me say something that we do is valuation, right? So we will not be paying the software for per login, but we'll say per valuation, I'll pay you this much. And you use AI, you use SaaS, whatever you want to do for completed work, I'll pay you this much. I think that might happen, and that's a bit of a pricing change in my view. Yeah. So
because I think cost of software is gonna go down. Nobody mind paying a $30 product, but if the cost is too much, and a lot of these companies have a huge P&L on the side, like they're paying a large amount to ERPs, and I think there's gonna be a lot of friction.
For sure, I think you will see a lot of new entrants coming in and putting pressure on the established players. Yeah.
And do you see traditional industries, one which you talked about, the boring businesses, right? How that affects the AI implementation? Does it only increase the GP side, cut more cost, or do you see they will become a high velocity companies like lawyers and accountants and this kind of insurance brokers?
I think there's a possibility for sure. For brokers, I think today they unfortunately are very manpower intensive, right? And they have a small sliver of commission to kind of make their business run. So I do see them using tools to help their people and slow down the curve of hiring. I think for sure. But businesses like, I like to say the landscaping business, for example, right? I think those guys at the front end, nobody is getting affected. But at the back end, for sure, right? Anybody who's in the office,
back office jobs,
correct, doing the customer service, doing the accounting, or even, hiring, for example, right? We spoke about hiring a little bit. You get thousands of CVs when you open a position, right? And about 90% of them is junk, right?
99%. Yes.
99%, right? So if an AI could actually run through it and say, hey, these are the guys who are the strong candidates that you should interview. And let's push that a little bit more. If a voice AI could actually do the screening interview and come with, these are the 5 guys or gals who you should talk to, how much time is saved, right? So that could be an interesting thing for these, boring, landscaping business or, lawyers. okay, lawyers is a different ballgame. I think you know about this company called Harvey.ly, which is a legal tech firm. It's raised billions. They are being actually seen as replacement to lawyers. But if you go and talk to some of my lawyer friends here, I don't think they're adopting any of these technologies yet. Right? Is it out of a fear of being replaced, or is it that they're not ready yet? I don't know. But I don't see local lawyers going away very soon. Yeah.
But when you work with a lot of founders, right? What do you generally observe where they are using AI and tech currently heavily? Like from your experience, you have been working in mature markets like India.
Yeah. I work with some of these accelerators where we see early stage founders, right? So 2 or 3 things. I mean, again, the lawyers come into the conversation. So for drafting the contracts, the first set of draft is now through AI, Claude, Perplexity, ChatGPT. For the second set, they go to the lawyer. Thankfully, you need a human to verify what is being produced. For making the ads earlier, I don't know about you, I'm terrible at copywriting. So to get the combination of headlines and description, it's beautiful, right? AI is a great tool. Now making images through Google Nano, Banana Pro and all that, it's all very easy. So ads for customer acquisition. And the third thing is MVP. To build a basic MVP, earlier, you remember we used to have to pay big bucks to some dev shop and you're not sure what you will get. Now, at least you get 70% decent product if you do on, for example, Replit, right? I really like Replit. So, yeah, I think these are the 3 things that people are using. Yeah.
Mainly using. We also use, so earlier we used to do prototyping to test, any features or anything. Earlier we used to design that and, take feedbacks and then actually you go into the development.
Yes.
Now we have changed the whole things. We go to Lovable and this kind of tools and just build out MVP there and, test internally with teams and then actually takes into production once the final. And the development time has gone super fast after that.
Correct.
Still, there are a lot of edge cases that you need to have a lot of verification. But I think overall, the speed of
has come up,
right? Yeah. And then also, when you were talking about the verification, like for us, I was mentioning to you that those CRs or doing categorization, we still have that edit button.
Yes.
That a human verify.
Yes.
Which you were mentioning, human in loop.
Yeah.
Right. So.
Correct.
That still there, but a large chunk of work. Like if I remember my last startup, for me to write a document, it used to take a week. So I used to have like a weekly sprints.
Right.
If I'm planning on something, it takes at least 3 days to review, research in 5 Google search engines, and then figure out. Just take bullet points from here and there, and then draft it.
Yeah.
Right. And then writing is actually a day job.
Yeah.
Even if you have bullet points for 2 days after research.
Correct.
Writing is and the rollout is like it's a 5-day job.
Correct.
Now, like it happens in 30 minutes.
Right.
You just give the bullet points.
It's much faster now.
It's super fast, right?
Yeah.
So the speed of development, speed of writing processes has gone massively at high scale.
Yeah.
But I think this is also like everybody is ramping up. It looks normal today.
Yeah, that is true. In fact, yeah, you're right. If you're not using it, then you have a problem. You are slow now, right? Yeah.
You don't move faster.
Correct.
And other industries like typically like e-com, which are popping up, right? And where do you see like this kind of industries are changing? And manufacturing industries, which we don't have much lens into what's really going on there, right? F&B.
Yeah, I mean, I think for me, we've done a little bit of work with e-commerce, and we see that again they are using AI for ads, developing product descriptions, product images, moderating the comments that people put on their sites, because people put some crazy comments sometimes. Manufacturing, I have very little exposure, so I'll have to defer that question. And also, some of the, for example, I don't know if you've seen Shopify, the backend in terms of the reporting, it can be quite chaotic, right? So I have a little bit of a history there. I don't usually share this. I launched a drop shipping cosmetic site for a bit and just experimented with it. The backend is quite chaotic, Shopify, right? So those reports now today, if you can feed it into AI, you can make a lot of sense of what's happening, what's the profitability, what is the inventory, where is it, so on and so forth. I believe it's far more easier if you can throw it into an AI engine and churn through the numbers, right? So for sure.
And what about BPO industry? This is one I think we spoke about
Yes.
later. We looked at a company that does
Correct.
AI workflows for BPO industries, like which is I think probably like a $800 billion industry on a global BPO.
Yeah. So yeah, I mean, I think we are seeing interesting things happening. One is first everybody got scared, right? All the current BPOs got scared and they said, okay, we need to exit. Let's find a suitable.
PE firms, and a lot of them did PE deals,
lot of them did it.
large to mid.
And some of them, they got smart and they were like Salesforce. They said, okay, just like Salesforce did, they put AI into their BPO processes. And they said, okay, now can I bring down the manpower and, have sort of, instead of human agents, I have part AI agents, 60, 70%, not 100% for sure, but my cost base probably comes down. So that's happening. There are some other interesting players who are looking out for mid-sized BPOs, buying them out and
rolling up
and putting AI into their systems and driving efficiencies and rolling up. So some of these interesting trends that are happening, right? So obviously we were advising a client who was selling the AI workflow solution.
Yes.
And in that process, we learned a little bit about the BPO industry as well. That's what happened. Yeah.
Is it rolling up is going to be like trending a lot because last year a lot of people were talking about boring businesses.
Yeah.
But the trend has changed more into rolling up companies, right? And I see like a lot of conversations are happening on internet about rolling up companies, like this kind of repeated boring businesses or BPOs, right?
Yeah.
And because of AI, people think that
it's possible to roll up.
It's possible because GP will go up and they can.
You had told me a very interesting scenario. I think probably you should explain for our listeners where the advertising firms, right? Virtual
consolidation, right?
I really like that. Yeah.
So that's the problem with the roll-ups or M&A. What happens is generally the M&A process is very cumbersome. It's fancy.
Yeah.
Right, to buy a company, but when you go into the details, you understand it takes 2-3 years to clean up and structure it out. So virtual consolidation is something that you can do, that you just roll up into a holding company without actually going into details of the operations. And so you roll up, consolidate at a holding company level, and just sell it to a larger PE firm,
right,
and who could probably bring the expertise and do the consolidation work from their side. They can mutualize a lot of tech resources, centralize hubs, and increase the GP.
Yeah, that was the concept, and that's quite fascinating because you don't have to do the hard work of integrating each company, and which can be a involved process. Yeah, interesting. Yeah.
I saw that that's a quite good process, but again there is one more layer, right? If you consolidate at the margins can be like you get a GP ratio, right? If you consolidate, now let's say if you are the standard carry you get doing PE deals, right? Like 20%, whatever the carry that you get. But if you really wants to make money, if you can you use debt to buy these companies and increase GP, right? That's where there's still look, I still didn't find some industries which can go really do that.
Right.
If you can take a company that has like probably GP of 30-40%, and can you increase the GP to 70% immediately, right? And this company is already giving like a bit of like 15-20%. Then your EBITDA goes up. So even if you buy them, you can pay back that in 1 or 2 years, and rest is yours, right? And you can probably own the 100% of that company then.
Right. Well, that's a good concept, and I feel as interest rates are coming down, the opportunities for debt, and some interesting moves like that will only increase.
Yeah, this is what I wanted to ask. Where do you see like 2026? Right. This is a lot of people are telling gold rates are spiking.
Right.
Is it an indicator?
Oh my God! Now, I'm not great at predicting anything. I only observe trends, and it's very difficult to say. I think it's safe to say that interest rates are on the downward trajectory.
What does it mean?
What does it mean that potentially you have lower cost of access to capital, right? So you can and do some of these fancy deals that you were talking about. Also, it potentially drives up the prices of the assets, like gold, example, right? Like Bitcoin. Now, question to ask is, how much in the last 18 months has gold already risen up in anticipation of a Fed interest rate drop, right? Remember, when we came into 2025, we were saying 4, 5 rate decreases. I think we got 2, right? Barely, right? So maybe gold has already kind of taken that upswing. So that's a point. And gold is obviously a safe haven, right? Whenever there's a crisis in the world, people buy gold, right? Some of us were thinking Bitcoin would be that digital gold, right? Look at where Bitcoin is today. Right?
It's crashed.
So things happen, right, which are beyond the control of armchair economists like me. So to be honest, I mean, I can't predict where it's going. All I can say is I think definitely AI is here to stay. There's probably going to be a little bit of a boom bust cycle in AI. I think a lot of capex has gone into AI, especially in the US. They say that if you take out the investment in AI, half of the GDP growth will completely come down in the US. So half of the GDP growth in the US is through AI capex investments.
How come that?
Data centers, you had to actually buy land, build buildings, get cooling, get racks. This is hardcore. There's a big shortage of electricians in the US right now for building out data centers. So this is happening, right? So there definitely has been an overbuild there, right? But AI is not going away, right? So maybe there's a 10-15% correction. That's what some of the experts in the market say. But life is going to go on. So I think we'll see more AI, not less AI, right? Especially in the UAE, I think stablecoins are here to stay because a lot of us send money back home, which means remittance, right? With stablecoins, you can potentially send money faster, right? So that's going to be a use case, and I think tokenization of some of the real world assets are going to grow, and I'm also excited about open finance again, right? Open finance, open insurance. So what can we do with that, right? So I think these are probably the 3 areas for next year. Right.
And do you see like an economy go down or just?
You know what? I've been predicting that the economy is going down for the last 2 years. So what I say is
not happening.
It's not happening. So pessimistic people like me, I'm not pessimist. I think I'm more of a realist. We have seen the uptick in the stock market, right? Dramatic growth in the US. Real estate, for example, closer home, Dubai has been on a great upswing. So if you look at some of the experts who are talking about it, and we shouldn't trust experts, but there is a bit of an oversupply of housing in Dubai, right? So people say anything between 25 to 15% correction is due, right? When is that going to happen? We don't know. Dubai continues to be a magnet of people, companies, investment. Yes. So there is a demand as well, right? So where does this all match out? Jury is still out, right? We don't know. Do we see a little bit of a correction in the US market, which cascades outward, especially, with the new government, the tariff has completely kind of upended the global trade. So will that continue to drive down, or will Trump create new trade deals and then will things go back to normal? We don't know that, right? Another area that I'm watching is Japan. Japanese yen has now depreciated a lot. And so they are slowly thinking of raising interest rates. So Japan has been the seat of carry trade, right? Because it's low cost capital, borrow it, invest in somewhere where it gives you high cost, high returns. That trade has been going on. But what happens when the reverse of that trade happens? Money will go back from these markets. And when money goes back, some of these prices will deflate. So that's something to watch out for next year, right?
Interesting.
These are some of the negatives, right? Yeah. But, overall, I am positive.
Do you see, like, generally I see that GDP goes really, really high when there are like tech companies are booming in that market, because they are one of the major catalyst for booming any GDP generally, right? If they build a lot of global companies, which has high scale, high velocity, and see, when I see from a larger perspective, the money has to flow from one place to another. So either some industries or somewhere things are dying, somewhere things are growing.
Yeah.
Right. Or there is a high productivity of the humans has increased a large, and the GDPs are skyrocketing on that perspective. Like, what's your take here? Like, how do you see? I'm still not very clear what's really, because every time there is a pessimistic view, but there is nothing pessimistic.
Yeah.
Always it's going up and up, and
Yeah.
and I think it's not gonna reach like a bubble, because somewhere I feel the productivity has gone up to a large extent, where there is a massive outputs are being generated.
Yes, you're right. I mean, it's a very good question. Last few years we have all been saying there's some sort of a bubble, but nothing has happened so far. My question is, let's take this AI example to the limit, right? You've seen now humanoid robots being built in China. There's a number of companies there, and
Tesla has a lot of robots.
US has a few, like Figure Robotics and all. So let's assume the robots become cheap, and they cost about $10,000. Would you buy a robot for your home activity, homework, and stuff like that? Like, household chores?
Why wouldn't do it? It might take like 60% of the job.
Robots, right?
Yeah.
Yeah. So if that's a low price point, I would buy it. I would keep one at home, right?
Yes.
Because I don't want to wash the dishes and load the clothes, right? And necessarily I don't want somebody in my house from somewhere who's cleaning and all that. Maybe I want to do it myself, me and my robot. I'm happy to do it.
And mostly cooking piece.
Cooking is a tough one.
If cooking piece can be taken care, even the hotels. Right?
I have my Deliveroo app, so
even the hotels can be.
For
restaurants, large extent can be used AI
for sure,
and robots to a large extent, right? Because I don't know, I still love to buy from restaurant and eat food.
Yeah,
but I don't know how much is clean there, right? I trust more robots than humans in terms of clean cooking and hygiene
and stuff. Yeah. That's a good point. That's a good point. And no, so the point I was making was that suppose these robots really come into our workforce, in factories, they're already there. What if they come at home? And we're talking 10 years down the line. So you don't need so much human, labor now, right? Who is going to pay them salaries? Who's going to give them livelihood, right? So what happens to them? And if they don't have a livelihood, forget about the social uprising that will happen. If they don't have anything to spend, what will they spend on in terms of the GDP and the economy? How will they send their kids to school? How will they buy food, live, so on and so forth? So I think there is an impact on GDP coming if you just go on an automation path. Somebody better think about this. And it's, I think, government's jobs to figure out how this works. I don't know the answer to this. I mean, I'm just trying to address that GDP point that you raised. I'm not sure it's a linear, uptick.
But
right?
Then it's a bubble, right?
Yeah, I think at least definitely in the model space, it feels like it's a bubble, right? You can see, a number of these model companies raising billions of dollars, and you can see that OpenAI gets investment from NVIDIA, and they buy NVIDIA chip, right? So people talk about the circular economy, and at some point it breaks, right? They apparently OpenAI has committed to buy, I want to say, is it 1.3 trillion worth of sales commitments they have made to buy chips. And their revenue this year is going to be around $20 billion. So 1.3 trillion to 20 billion, how does that work? So somebody has to think through, where is the economics of this? Or do you see a case like, where OpenAI will be the only model surviving in 10 years' time?
No, I think there's a lot of people are saying OpenAI is gonna burst out, right? They're overhyped, and I don't know the truth behind all this.
We don't know, yeah. But the numbers seem a bit shaky, right? I don't know. So long story short, I think all of these model companies may not survive, right? Some of them will survive for sure, and maybe specialized ones will survive. Like today, Anthropic and Claude are actually specialized in coding. They're very good.
They've been heavily used.
And you might see some of the open source models from China. For example, you remember DeepSeek in January, was it? When it came out, everybody got scared, right? So China is producing very good models and releasing it in open source. So now question is, why don't you use those models instead of paying for, OpenAI models as a there are multiple reasons why not to, and multiple reasons why yes also. So I think the game is not over yet. I think we can say that safely.
And if I was looking at the top companies in US, right, and all of them all of them are tech companies.
Yeah,
right.
That's a good point.
And how do you markets like UAE has been a service economy? Other parts of the world, most of the top companies are not no tech companies.
Saudis,
They're
Aramco.
yeah, like all service based, manufacturing based, industrial based companies.
Yeah.
How do you see that change? Do you see like any shift happening, especially in UAE? The next. Now we have seen the Talabat story of a $10 billion IPO, right?
Yes.
Incredible story to have a decacorn
Yeah.
from here actually.
Yeah.
I wouldn't think how they built like a $10 billion unit
That's right.
just out of here, right? That's
an amazing
quite much.
story.
Yeah. Like we had Kareem's, doing $3 billion.
Yeah.
And I think they were doing like a revenue of like 500 million, 600 million, but that's still not a story to tell about the whole economy. But I think probably Talabat would be doing a few $1 billion as revenue, if I'm correct.
Right.
So that's one of the largest.
Indeed. I mean, you're asking if you see more of these tech companies become bigger here?
On the top.
It's a very good question, actually.
Not only here, like across emerging markets.
I mean, here it's more family businesses and it's retail, right? I mean, we still like to go to shops and look at the clothes and buy, and we still like to go to restaurants and eat. Although we like our delivery apps, right? It's a very interesting question. I don't know the answer to that one. Yeah. What's your take on that?
No, I think, I still couldn't think that, Talabat does more revenue than Lulu Hypermarket.
Wow.
That's where
phenomenal, right?
that's phenomenal. They're like very big brick and mortar businesses, and somewhere this kind of companies have came in last 10 years, and this phenomenal brick and mortar businesses has been a success story in the UAE and has been a poster boy for years, right?
Correct.
And they have run through a grind of 30, 40, 50 years. These tech companies came and changed the whole story in 10 years, 15 years story.
Yeah.
They built much bigger companies.
Yeah.
And it's what they do, the same thing, right? The same product. Even if you look at Noon, right? Comparing Dubai Mall versus Noon, the same shopping experience, same products they're selling end of the day to the experience can be different.
But experience is different, yeah.
The product is
the same.
What you get end of the day is same. Right? But who does more money? Who makes more revenue? Who owns a major chunk of the?
It's a good question, right? And actually they are middlemen, or middle people, as I call them, right? Basically they're not manufacturing. They're connecting us to.
I think they will do.
You think they will actually get into manufacturing?
Yeah. See, even if you look at one of the examples of Lulu, all these brands, right?
Right.
They started with a front end last mile with the customers. They've opened these shopping malls, good experience, right? And what they did in the back of it, they produced a lot of these products. Even if you go to hypermarket today, you see their own products.
Lulu branded products, right?
Yeah, they see like what are the categories which are making money, which is not available. They start building their own brands and shipping, maybe large, like 20-30% of the products. That's where they make a lot of money. And they have n number of subsidiaries under their umbrella, which are producing, houseware, groceries, right? A lot of these units, even food, F&B, all these things. And this is a Zepto story. Zepto has done something very similar in India. If you look at, right?
That's right. Are they making their own products as well?
They have lots of them.
Oh, wow.
They have like nuts, roasteries. They have
so eventually they will become a sort of a supermarket slash food giant slash many categories, right? Wow. And they've owned the distribution, right? They first went to the last leg and then they started up the chain, right? It's crazy.
But the interesting piece, they did this with the tech infrastructure layer that they could scale than brick and mortar businesses, because brick and mortar businesses, if they've reached to the next shop, they actually have to put up another shop and do the whole construction. It takes years.
Correct.
And this is something they can just spin off into a new city in like couple of months. If you look at Kita, for example, right?
Kita, how fast have they grown, right?
Yeah, I heard that they measure the milestones in days.
Wow.
So we look at next 3 months we have to be in another city. They look at next 15 days we have to be in another. So they count things in days.
Wow,
that's a very
that's a different way of thinking.
And do you see like how things are shaping in UAE, at least because you are very active in fintech ecosystem? You must have seen Tabby story and all these companies, right?
Absolutely. I think I see a lot of these early fintechs working now on the SME side of the BNPL story. Earlier it was for Shafeekh to buy a nice jacket. Now it is for a company to get paid quickly, or to buy some stuff quickly, right? So now they're focusing on SMEs. So that's happening. The challenge there is credit rating is very difficult for companies, right? Because we don't have so much history like, let's say US or India or wherever. So that's a challenge. So alternative sources of data are required, right? Yeah, and I don't think they have cracked it, but people are working on it. I can see a lot of activity in the Web3 world as well, right? Because we have such good regulations here. At least there's clarity on the regulations, right? Many countries didn't have the clarity. US only got it recently under Trump, right? The Genius Act. So yeah, for sure, these two areas I'm seeing
that you are seeing in the
fintech world, yeah, for sure.
Any other industries that you see like in especially this part of the world which is booming? Like, what are your like big bets 2026?
Wow. I mean, I think, okay, this is controversial. Okay, now this is an AI world, right? We spoke about AI for so long. The mobile phone completely dominates our conversation, right? We cannot, I look at it hundreds of times a day, right? We are telling our children, don't waste your time on social media, right? And reality is we are also doing it, right? So I feel the next few years, a lot of things will be automated and all that, but I think there's an undercurrent of anti-AI, anti-technology that's going to happen. I think in real life is going to come back in a big way. And I think that human touch, we could have done this on Zoom, right? But this is far more interactive. We can study body language, and
yes,
it's fun. We've got a nice fireplace. Yeah, so it's a different ball game altogether. I feel that community,
that's going to be the premium segment.
Yes, I think that's coming back. I don't know. I may be wrong here.
No. This is I met someone who does like a lot of sports events in India, and he's saying people like 2,000, 3,000 people are signing up for a sports event.
Okay. Interesting. What sport? Don't tell me cricket again.
No, not cricket. Like high rocks.
Okay.
Like running, this kind of outdoor sports, and which is happening massive.
All right.
And parents are spending a lot more money sending kids to sports, and so it's a lot of in-person events.
Right.
Are becoming more and more premium. I think it gives you like that.
Yeah, that human connect. I think that we were all tired of that COVID, where we couldn't meet people, right? I think that's now coming back in a big way.
Yeah. I think earlier, like when it was common, you were very shy to go to social events or meet people, and when you are stuck in home for 2 years, you have that craving to meet people.
Absolutely.
Right, and that looks like something
correct,
very premium to meet people, talk to them, right? And that you just wanted to get out, and that you feel very blessed actually to meet people. You find more values.
Absolutely.
And started more measuring in terms of what are the benefits of meeting in
absolutely. I feel things like what we do, like FinTech Tuesdays, right? Why do people come out and meet? Because it's kind of difficult in today's world to make friends, make contacts, make connects, and there's a limit to Zoom calls and Teams calls that we can have, right? So people love to come out, shake hands, meet people, have a chat,
bit of barbecue,
nice beverages, right?
And Renjit, what's your like plans 2026? Not in terms of plans, like what are your go-to things for
2026?
Yeah,
I think definitely, like I started, I think I need to get some more focus. I need to double down on certain things that are working. And business-wise, I think I'm looking to get partnerships, like-minded people who can help us take us to new sort of customer segments. So I think these are the two big things for 2026 for me.
And do you see like a massive change that's going to happen in 2026? It's going to be faster than 2025, or?
That's a very good one. I would say 2026 is probably going to be same as 2025. Maybe there will be a little bit of a point where we take a breath when that downturn or the minor correction that I spoke about happens. But then I think things should pick up and run again.
Go back again.
Yeah.
But I think a lot of things are sorted in 2025 related to the world crisis, war, and all these things have settled down. I think it's going to be more
Upswing.
Upswing.
See, that's the thing with entrepreneurs. We are always positive, right?
We always expect things to be good.
Yes.
Yeah.
Absolutely.
But a lot of predictions are there. There's going to be a downswing, but we have
Yeah.
to see. But for me, I see that all these things, a lot of uncertainties in the world
Settle
have
down.
settled down. A lot of regulations has came related to crypto and other things.
Yeah.
A lot of things have clarity. Bitcoin was going and up and down, and then reached to a point that even Michael Saylor agreed to sell some shares.
Right. Absolutely, he did. Yeah. Yeah, you're right. I mean, I think we are fortunate to be in UAE. I think we have a very good leadership here, great vision. We are constantly going forward, right? There's no going back. I mean, this is the right place to build, right? Yeah. So,
And I think UAE. One of the thing I observe that a lot of capital here and a lot of ambition.
yes.
Both are there. So if you are an ambitious founder or an entrepreneur,
Yeah.
Definitely this is one of the best place to be in, because you get all the infrastructure to build.
Yeah.
Right. Yes, you have to get even talents density is increasing here more. Right.
For sure.
There are more and more talents coming to.
Yeah. From the world, right? Some of the issues that happen in the world, and when they look at UAE, they say, "Hey, this is a great bright spot, right? Let's move there." And a lot of enabling regulations have been passed.
It's very easy to talk to the regulators and governments compared to other
jurisdictions. Yeah.
other markets and jurisdictions. Right.
For
This
sure.
is very. You can walk in and have conversations and try to
Yeah.
see what we can do together. Right.
They're ready to work with you. It's not like they shut down the conversation, right? So,
More
what are you excited about?
Yeah, so for me, I see the whole change that's happening in emerging markets other than US. US is definitely has a lot of innovation, a lot of density and concentration of talents, capital. But I think other markets also going to emerge.
Right.
And UAE, Saudi, all going to be in the spotlight. And also India is also very, very big in terms of market opportunities. And I see if, Middle Eastern companies go global from here, that's where the potential emerge, right? And I think that's going to happen, the next set of leap in terms of that. And a lot more companies going to come with AI and a lot more efficiency going to come.
Sure.
So I am just thinking how fast things will move.
Right.
2026, right? What's the velocity that
I think that's one thing for sure. This place is fast. There's never a dull moment, right?
It's always moving.
Yeah.
Government will push you with events and
Yes. Something or
network.
the other is happening, right?
Yeah.
Yeah.
A lot more happening, and it's the most easiest thing is it's very more friendly to approachable. So if you really want to build like a global company, and you see a lot more opportunities, right? And somewhere you feel you have a bird's eye view into other markets as well sitting here. This is more of a launchpad. Market is small, but you have access to all other global markets from here. Right. So it's easy to travel, easy to go and see what's happening in other world. Second, you also get to meet a lot of people from other countries. That's a beautiful thing. Like, especially, for example, if you are in India, for example, right, you have a bigger market, you have bigger audience, but it's very hard to know what's happening around the world.
Yeah.
Because you don't meet those people, right? Here you meet all these people, all the business owners, entrepreneurs coming from different parts of the world.
That's right.
Talking about their country, what are the opportunities in their country.
Yeah.
At least, maybe what's their population, what's the business model, what are the businesses
Some
going.
new thinking that comes in, right? Yeah, absolutely.
So you always think you are a global citizen.
Yeah.
And you have more global outlook by sitting here.
For sure.
And that's what I'm excited about.
Right. Excellent. No, that's a good positive note to look forward to in 2026.
Yeah, and how fast can you build companies, right? That's a
challenge.
Yeah, that's a challenge. How much tech and leverage, resources, capital that you can get to build these bigger ventures from here.
Yeah,
that's a time has to tell. We are also pushing hard.
Right. I know you've had a great success story so far, and
we are still small fish in a big pond.
You're growing well, and and where you have reached from where you started is amazing.
Where we met first time.
Yeah, absolutely.
For a coffee.
Yes, indeed.
And also, Renjit, wanted to ask you now, how do you see investment landscape generally, right? More and more companies are gonna get funded. Startups, PE plays, or a lot of entrepreneurs are becoming private equity funds, right? And
Yeah.
how do you see that?
So here at least something good is happening in the UAE is that now we are having that second generation of founders, right? As you mentioned, we have had Kareem exit, Souq.com exit, so on and so forth. So those founders have now started giving back to the ecosystem. So that's a great story. So you would see that happening, expertise and smart money, right? Second, as the cost of funds are going down, players who are in the PE space, etc., will tap into these lower cost of fund pools and will look for higher yields, and that's where startup funding, business funding comes into play, right? So I think that's a good story. I think that should continue to happen. We speak about billions of dollars being on the sidelines in terms of dry powder and not yet deployed. I think that should all come into play as the interest rates go down, right? So that's a good story. But here is the flip side of it, that perhaps some of those guys who were playing in the crypto markets thinking about backing Bitcoin, or some of them who were playing with the AI trade, I hope they have not got burnt, that their capital is not ready to be deployed. So that's one part of it, right? What should founders do to tap this? Let's say, for example, a startup that we typically talk to for VCs, they need to see business which is growing fast, unit economic positive, serving a real need of the customer, right? And they need to see these startups operating in multi-billion-dollar TAMs. If your target market is a $10 million TAM, it's okay. You are just a business. That's not a bad thing, right? But that's not a VC fundable business. So don't go chasing VC funds if your business itself is not ready to be, rocket ship. Like VC funds are like rocket fuel. You can't put rocket fuel into a car, right? That doesn't work. It's okay to have a car, right?
But how about PE plays, right? Like VCs are there for that's what a lot of founders don't understand.
Right.
Is that VCs are there for a multi-billion dollar
Exit,
TAM.
right.
They should see that billion-dollar path.
Yes.
If they don't see that, they don't get confidence, even no matter how good your idea is, how good your business is.
Yes.
And also a lot of founders friends, I tell them that getting VC money is not your goal, because they are serving different purpose. And they have a different agenda altogether in an investment, right? So you may not be a right fit for them. That's what. It's not a validation of your business.
Correct.
Or you can still build $100 million business.
Absolutely.
And without a VC money. But there is a PE play alternatively, right? How that is evolving, and that's also a lot of these companies could get a PE fund and consolidate, do small IPO.
Correct.
There are a lot of opportunities out there.
And in this region especially, right, there are PE players, there are high net worth individuals, there are syndicates, there's sovereign wealth funds, and fund of funds, so actually the opportunities are pretty endless for good businesses. This last week, I had the good fortune of speaking to somebody from the education sector. Another beautiful sector in the UAE, right? There's a huge demand for affordable schools in the UAE, right? But does anybody get into the education sector? No. Maybe it's not sexy enough. I don't know. But it's needed, right? I was speaking to a founder today who is in the travel industry. They have very thin margins. But with technology, they can really do a lot, because it's all about having supply inventory of beds, of travel, tourism, visa, everything, right? High working capital, but if you manage that information needs properly, you can build a very strong business. Is it really VC fundable? Maybe not, but you can build multi-$100 million businesses out of it, right? So, I was just supporting the point that you made. And there are different classes of investors for these businesses, right? Yeah.
Like, would you suggest them like typical private equity funds or HNIs or?
I mean, I think it totally depends on the industry, the vision, the amount of funds needed, the patience of the investor as well with respect to your business plan. I think all these will come into play. Typically, PE players are surprisingly not very patient. I mean, they look at it maybe
5 years,
3 to 5 year kind of a horizon.
5 to 10 years.
Yeah, but they don't want a big multiple, right? As much as a VC, for example, right? So yeah, I mean, when the funding size is substantial enough, you actually start to talk about PE players.
And what are the other opportunities? Like somebody who has like a traditional business or a tech-enabled business.
Right.
like other opportunities from a funding landscape, because all of them wants to grow end of the day.
Yeah.
If they're doing $5-10 million, they wanted to double, triple
Yes.
as they grow, right? And
Yeah.
what are the ways? Because they typically go to VCs,
Yeah.
and VC says no, we don't see a TAM of $1 billion here.
That's a good question. I think you probably, first of all, I think if you can build a business that doesn't require VC funding, it's a great business, right? Start to make money and maybe sacrifice a little bit of the growth in favor of unit economics is something I would say. Then the non-VC funding sources open up. And depending on the stage and size of investment, it might be an HNI or it might be a corporate venture arm. For example, some of these big family businesses are interested in funding a business which is somewhat connected to their line of business, and they can co-opt into their main lines of business, right? So I think the possibilities are endless, but you should have a structurally solid business.
Yes,
Right.
So I think a lot of founders also, this is one of the mistakes. They jump into fundraising before even actually having a business on the ground.
That's right.
So I think that's very important, even for a VC money, right? Unless you are like a second time founder who has built a lot of ventures and exited.
Yeah.
It's really hard to get into that VC. And today you can, as you mentioned, you can build MVP, test it out, all these things using Replit and other things, which actually doesn't cost much.
No, $20 per month. You can test it out, see the idea works or not, right? For example, for my software that I built, I just got one customer, so clearly that didn't work.
Shut it down.
Shut it down.
Next idea.
Next idea.
So one more thing I wanted to ask you, Renjit, about M&A process, right? A lot of times M&A deals or fundraising are stuck because they don't have right data room, they don't have shop in order. And how do you see, like, what is your key advices for founders or business owners who are building today?
Yeah.
How they can build for an exit or a fundraise? What are the little nuances they need to take care?
Yeah. And I think this question is a very good one and is relevant to even startup founders as well, to get their shop in order, as you said rightly, right? Sometimes we put the accounting piece of it for the last, right? You said we build the product, sell it to somebody. They don't even have a way to collect payments, right? Who's going to pay you then, right? Do you raise invoices, right? Do you keep the records of your customers? So on and so forth. Some basic stuff is absolutely important. So for the M&A piece, we actually spend a lot of time even building a sort of data room where we have a number of things, right from the trade license of the company, the audited accounts of the company, who are your customers, and is there a customer concentration? Like, for example, if it's more than 70%, then you're not
high risk.
It's a high risk, right? You don't do the deal. So all these record keeping, very boring stuff, but absolutely important. It might mean the difference between a large size funding. You can see a percentage of the multiple drop down because it's a messy business or it's not a well run business. That's the perception that the seller gets, right? So definitely.
And I think this is gonna be more relevant in next years.
Yeah.
Especially in UAE, because UAE has been not very structural economy, but they are moving more towards structural economies.
Yeah.
There the companies do, right? A lot of companies were also not very structural. They don't look at compliance. They don't look at basic bookkeeping, record keeping things. Compliance and nuances are not taken care well, and I think it's going to be structured
even more important. Yeah, absolutely. And very interesting regulations are also coming, like e-invoicing and stuff, which I'm sure you will talk about. And I think it's not worth playing around with regulations. Just keep your house in order. Register yourself where it's required for tax, pay those taxes. Run a good business so that you're able to pay tax. That's what I tell founders. Don't try and avoid paying tax, for God's sake. Right? Run a good shop. Right? Yeah.
Oh, that's interesting. And I think a lot of people want to save taxes and they wanted to cut down the margin, but eventually your business valuation is going down when you do that, right? It's
Absolutely.
worth paying taxes.
Yeah.
And have a good.
You should be proud to pay taxes. That means you're a big business.
Yes. And what are some of your advices for founders who are building, scaling? Like, you have been in the ecosystem, you could potentially plot and figure out a lot of trends, right? What works, what doesn't work, and like for the audience who are watching.
Sure. I think I'll keep it short. I mean, I think one of the key things is many people hold their ideas very closely to their chest, right? I feel that the ideas are, to be honest, a lot of people have good ideas. I think the execution is the problem. And sometimes sharing your ideas with the right people, not with everybody, with good people like you or yourselves who have a head start. When you share ideas, they will come and challenge you and tell you this works, this doesn't work. They're not going to steal your idea and start a fintech. That's not
easy as you
That's
think.
not as easy. But they can tell you your pitfalls, right? So share your idea, test it out with customers even. No need to launch a full bank, but have a website with the value proposition written on it. Run a Facebook ad or run a Google ad or TikTok ad. See if anybody is going there and signing on, giving their email. Test it out before you go full hog and go into VC funding and stuff like that, right? And I think the third thing is know your numbers, right? And sometimes the ideas are great, but the unit economics doesn't make sense. If you're spending more money than you're making, that's not a business. That's just a dream, right? So yeah, I think that's
this is when you mentioned about this, right? This is what one of the thing I have observed is that there is going to be a lot more entrepreneurs because cost of building companies has
come down
drastically.
Yes.
So a lot more people going to be entrepreneurs. Even if you look at UAE, right, 5 to 10% of population are entrepreneurs.
Right.
That's not...
is that the number?
Earlier, if you talk like I'm a businessman or I'm an entrepreneur, that's like 1 out of
many
1,000.
Right. People wanted salaried jobs, right? Yeah.
That shift is happening, and that's what you are advocating for people to be more entrepreneurs. Start out the idea, test it out, and
and also don't do it just for the to be fashionable and say I'm an entrepreneur, right? It should be real meaty.
There should be real cash.
Yeah, it makes sense, right? Some customer needs it, and some customer is ready to pay for it. Right? Make sure that is there before you quit your job. Right? So, yeah.
Yeah, I would suggest anybody to start. There's a book called $100 Startups. I don't know if you have read that.
I think so. It's a nice one. Yeah.
It's a nice one. How do you have a lot of side hustles and then you build an entrepreneurship out of it?
Absolutely.
Awesome. Cool. Thank you. I think thank you for your time, Renjit. Sure. Thank you for joining today.
As usual, it's a pleasure to talk to you.
Same here. Thank you.
Thank you very much.
Yeah.